What if I told you there is an investment designed to grow with you, adapt as you age, and take care of itself while you live your life? What if I told you that the wealthy use this strategy silently, and that you probably have access to it without even realizing it? This is not a gimmick. It is not a new trend. This is the secret world of target date funds, and it could quietly change your financial future while you focus on living your best life. You are a young professional. You are trying to figure out how to get ahead. You work hard. You save what you can, but investing feels confusing, risky, overwhelming. Every time you try to research, the noise of the market and jargon-filled language pushes you away. So you keep putting it off. And the cost of delay? It is enormous. Not just financially, but mentally. Because stress around money is not just about numbers, it is about peace. Today, we are going to change that. This video will walk you through what target date funds are, how they work, how successful people use them, and what to look for when choosing one. This is not financial advice, but it is the kind of knowledge that opens doors. The kind that most people never get because no one explains it clearly. By the end, you will have a crystal clear understanding of one of the simplest, smartest ways to build long-term wealth. You will be able to take action from a place of clarity. Watch until the end, because this one concept could be the turning point in your financial future. Imagine you could invest in a single fund that automatically adjusts over time based on when you plan to retire. That is a target date fund. It is like a financial GPS that guides your investments through your entire journey, adapting along the way so you stay on track. When you are young, the fund invests aggressively, focusing on stocks and other high-growth opportunities. This is when you have time on your side. As you approach retirement, the fund gradually shifts towards safer investments like bonds and fixed income assets. This way, you are reducing risk right when it matters most. You do not need to be a financial expert. All you do is choose the year closest to when you plan to retire. That becomes your target date. Simple, strategic, a system that evolves with you. Most people do not have the time, confidence, or experience to rebalance their investments every year. Life gets busy. Priorities change. Markets fluctuate. And many young professionals freeze, overwhelmed by the idea of making the wrong move. Target date funds were designed to solve this exact problem. They offer a hands-off, long-term investment strategy that adjusts automatically. Like a self-driving car for your money, they require less maintenance and allow you to focus on living your life. You do not need to log in daily. You do not need to obsess over headlines. You just need to start. Every target date fund follows what is called a glide path. Think of it as a map of how your investments shift over time. In your 20s and 30s, the fund leans heavily into growth, stocks, international exposure, real estate investment trusts. It is not playing it safe because at that stage, you can afford to ride out volatility. As you enter your 40s, 50s, and 60s, the fund begins to tilt towards stability. Bonds, fixed income, cash equivalents. The goal is preservation of capital. Protect what you have built while still growing carefully. This slow, strategic transition removes the guesswork. You are not jumping in and out of the market. You are riding the glide path. Wealthy investors understand something most beginners do not. Investing is about automation and emotional control. Target date funds reduce emotional investing. They shield you from panic decisions when markets dip. They help you stay consistent. And they quietly build your net worth in the background. Here are a few truths the wealthy know. Monthly contributions compound. Even small amounts grow into large sums with time. The less you touch your portfolio, the more likely it is to succeed. Diversification is baked in. You get exposure to various asset classes without needing to know the details. Compound growth is not magic. It is math. And math works. Successful investors do not micromanage. They automate, systemize, and let their strategy do the heavy lifting. Here are some well-known examples you may have access to through your workplace or retirement accounts. Vanguard Target Retirement Funds example. Vanguard 2065 Fund. Fidelity Freedom Index Funds example. Fidelity Freedom 2050. T. Rowe Price Retirement Funds. Schwab Target Index Funds. Each of these providers offers slightly different glide paths, expense ratios, and asset allocations. Some are more conservative. Some are more growth-focused. But the core principle remains the same. Look for funds with low FEs and transparent structures. If you have a 401k, 403b, or similar retirement plan through your job, chances are your default investment option is a target date fund. Yes, you may already be using this powerful strategy and not even know it. Log into your retirement account. Look for something with a year in the name, like Target 2060 or Freedom 2055. That year reflects your estimated retirement timeline, and the fund is working quietly to support it. That 5-minute check could be the most important financial discovery you make all year. Choosing the right target date fund is simpler than you think, but it is still important to do it thoughtfully. Here is what to consider. Match the target year to your estimated retirement age. If you are 25 now and want to retire around 65, choose a 2065 fund. Compare expense ratios. Lower FEs mean more money stays in your pocket over time. Review the asset allocation. Some funds are more aggressive early on. Make sure the glide path fits your comfort level. Read the prospectus. It sounds boring, but understanding how the fund operates gives you confidence to stick with it. Emotions ruin more investment plans than bad markets. Fear makes people sell low. Greed makes them chase hype. Impatience makes them quit too soon. Target date funds protect you from yourself. They provide discipline without drama. They are engineered to remove emotion from the process. Over time, discipline outperforms brilliance. That is why this works. Because it is not loud. It is not viral. It is not flashy. Target date funds do not promise overnight riches. They promise something better, steady, predictable growth. And that is not exciting to most people, but it is liberating for those who understand it. While others chase trends, you can choose timeless strategy. Here is your roadmap. Check your current investment accounts. Are you in a target date fund? Research the options available through your provider. Begin or increase your monthly contributions. Even $25 matters. Bookmark this video for future reference and inspiration. Start our How You Can playlist. Let it play while you drive, cook, or walk. Let it rewire your subconscious for calm, consistent action. Momentum starts with one small move. Wealth is not built by doing a million things right. It is built by doing a few simple things consistently. The wealthy know, time in the market beats timing the market. A boring plan that is followed beats a brilliant plan that is abandoned. Systems create success. Emotion destroys it. Most wealth is built by those who do not need to talk about it. Target date funds reflect that truth. Quiet, powerful, reliable. Now it is your turn to contribute. Your mindset, just leveled up. Share it. Comment below, what is your target retirement year? Or what year would you choose to start now? Your words will inspire someone. This is not just a video. It is a movement. Like this if you feel clarity. Subscribe if you want weekly tools to build calm, focused wealth. And do not forget, our How You Can playlist is designed to train your mind for success. Let it play daily. Let it change your life. You do not need to be perfect. You just need to begin. Target date funds are not flashy. They are not dramatic. But they are one of the smartest tools you can use to build your future. Today is your starting line. 10 years from now, you will look back and be grateful for this moment. Like, comment, subscribe. Welcome to the How You Can movement. Let us build your wealth timeline together.